Hi, welcome. My name is Nyasha and welcome to Accounting with Lwazi. So today we're going to be looking at the Cambridge O-level paper and specifically the paper 2 structured in 2020, written in 2023, May, June. But we're going to focus on the trial balance. But first, what is a trial balance? Before I give you the tips and tricks and what else you can use to have a good adjusted trial balance, just a quick refresher for us to remember what a trial balance is. A trial balance is a statement in which that lists all general ledger accounts of a business and their respective debit or credit balances, and it's typically prepared at the end of an accounting period. So when it says it's prepared at the end of the accounting period, it means which accounting period. It in certain places the accounting period could be a quarter, some would be yearly. And also what we need to remember about adjusting the trial balance is it's a crucial step. It's really a crucial step for us to actually continue with the accounting process, as it ensures that financial statements are accurately reflect the financial position and performance of a business for a specific period. Now, my number one tip that I've gone with since I started learning accounts almost 14 years ago, I believe, or 10 years ago, one of the two. When we're doing accounting and the trial balance, a quick way for us to remember is through PEARLS. And PEARLS just simply is an acronym for purchases, expenses, assets. That would be on the debit side. And then on the credit side would be the revenue, liability, and sales. That's for when you need to adjust for a trial balance. It's a good way for you to remember, okay, quickly in an exam, if you're feeling like you're panicking, just write down on your paper, PEARLS. That'd be so simple for you to just put PEARLS on there and then remember that, okay, things that are like purchases, the expense and the assets have to have a debit balance, and revenue and the liability and the sales have to have a credit balance. That's already a trick. That's already getting you somewhere. There we go. So then we're going to do fittings and equipment. Before we even begin, let me just insert a couple of rows and then just write again what we said. PEA, that's on the debit. So let's just put PEA here and put RLS. Remember? PEARLS. So PEARLS standing for purchases, expenses, assets, revenue, liability, and sales. So then we then look at the question that we have. Ahmad's trial balance is also on the 31st of March. So then here we see we have fittings and equipment at cost. Fittings and equipment at cost is an asset, because it is the fittings and equipment could be a machine that we've bought to help us create a particular product. So it is actually an asset, and hence it actually is on the wrong side. It needs to be on the debit if we're following the PEA, because the assets go on the debit. So we change that and put 30,000 on the debit balance. We also look at the provision for fittings and equipment. Obviously, if fittings at cost is on the debit, whatever provisions for depreciation are need to be credit. This is because provisions for depreciation reduce the balance, because there's a provisions for every year our fittings are losing value because of wear and tear of using it, so it needs to reduce. So it's easier as long as you know that, oh, assets go on the debit, then obviously the provisions for it will have to go on the credit to reduce the balance. We then go into trade receivables. trade receivables are, when it comes to trade receivables, we can look at what trade receivables are. Trade receivables are current assets within the financial statement of position, as trade receivables are people that owe the company money. So that is money that is meant to be coming in. So if it's an asset, it goes onto the debit side, just as we said in the PEA. Let me just make this a bit more colorful. Won't we? Just give me a second. Right, so we say the yellow is the debit and the blue is the credit. Right? So then we can go on to the next one. It says the bank overdraft is 3,106. And if we keep following the same aspect, the bank overdraft is a liability towards us as we owe money. So it's an undercurrent liabilities. It will obviously be a credit balance. If we continue and look at trade payables, now if we've understood properly what trade receivables are, trade payables are when we owe money. When we owe money to our suppliers, so that is a current liability to us. That will obviously then be a credit balance. Then if we look at capital is neither purchase expenses or assets or revenue, liability or sales, but capital carries a credit balance. We'll try and pop up a good reason up there, but it carries a credit balance as you put it into the company. It is something that increases within the company. And then if we continue, we will see purchases. Isn't that simple now to... Oh my days, mine. Okay, it's sales actually, sorry. So if you see the sales, obviously as we've seen, it will go to the credit side and simply, and then purchases will have to be on the debit. Hence why it's important also, I would note that when you're doing an adjusted trial balance, go from the top to the bottom so that you don't get anything, you don't miss out anything that should have been there. At the end, I will explain what a suspense account is and the reason for it. So we'll go down a bit quicker. The discounts received. Okay, discounts received. Isn't it that an interesting aspect? So discounts received, we can see that in the income statement. When someone comes and buys, when we go, in fact, sorry, to go buy something from our suppliers and we pay within the time they've given us, and they give us a whole an extra initiative for us to finish early, and they say we're gonna pay, you guys need to manage to pay, if your business manages to pay for all the bottles they've bought from us within 2 months, we'll give you a 10% discount. So this is the discount received. What does this then do? I think for us to explain this, we need to understand that we were going there to purchase something. So it would have been a debit balance when we were purchasing something. However, the amount that we used to purchase has reduced because they've given us, instead of us paying $20, we are now going to pay $15 because we paid within the time they wanted us to pay, and hence we got a bit of a discount. And this discount received, because we are getting the discount, is a credit balance because it reduces. So sometimes you need to remember, okay, with the discount received, what is it associated with? It is associated with purchases, the purchases we've made. So then the discount received is 1990, and then the returns inwards. Now returns inwards are when, I'm just making sure I've put all the points I wanted to talk about. Okay, returns inwards, this is when we've sold something. That's already a tip. We've sold something and the customer has returned it just because it may be faulty, they may have changed their mind, so many reasons why things are returned back into us, into our business, because we're working on this as Amadi's business. So it's been returned back into Amadi's business. So when we're returning something, it's reducing something. Something would have happened. We would have sold something for us to get a return inwards. You cannot get something returned without something having gone out. So in this case, we know that sales, as we saw here, are a credit balance. So then our returns inwards will have to be debit because they reduce the amount. So that will be 3390. We continue. Carriage inwards. Carriage inwards is an aspect when we buy something from a company and their expenses to bring it to where Amadi is. Those are the expenses of carrying things into the business. So this one doesn't decrease purchases, it actually increases the overall cost. So would then put that as a debit balance. Let me just see if all the points, we're almost there. Yes, there we go. And we're almost at the end. And then we see at the end we have, okay, general expenses. When we look at our general expenses here, the general expenses are 6430. And as we've used the equation on top, PEA, E stands for expenses. So then that's where we have it. Rent and rates. Rent and rates are an expense to us, so it also follows the same method, and it is 7380. Drawings are when the owner of the company, or the owners if it's in a partnership, but in this case it seems like Amadi is a sole trader, which I had mentioned how to understand. If you want to understand a bit more about what a sole trader is, or what partnerships are, there is a video linked within my bio, linked within the video to just get you to understand those terms. So with the drawings taken from a sole trader, they've taken money from within the company. It needs to reduce. So if we had sold 50 goods at 10 pounds, we have 500 at the moment, and Amadi has taken 10 pounds out of it, which means the revenue that we initially had has reduced, and hence why drawings is a debit balance, which is 9,500. Then we have our inventory. When we come to inventory, let me just get back up. Okay, I want to show us the pearls. Let me see if I can just have this slightly right. So with the pearls, back at the same situation, with our pearls there, inventory. What is inventory? Why do we have inventory? What's going on? And we have two of them. Why do we have two? Which one is meant to be there? Which one isn't meant to be there? That's important for us to remember. So within our trial balance, the inventory that is meant to show is within the beginning of the period. So as we see in the question, 31 March is the end of the period. So we need to have the beginning of the period, which is 3752. But which side is it meant to be on? Inventory are things that we have in store, things that are waiting to be sold. So when they are sold on the credit side, and they are sold for revenue. So at the moment we have them in store, and hence it is a debit balance. Now, if we total this up, obviously within an exam you have to do the totaling up yourself, but in this case we can just total this up, and we'll find we have 1095860, which is the right answer, right? But if we total up the other side, we will see it's 1093331, which means something's going on. There is a difference. This brings in the aspects of a suspense account. A suspense account is an account that is formed honestly when we are working and we find something we don't understand, what error we might have dealt with, and we might have missed, in fact, an error that we might have missed within our books of prime entry throughout the whole accounting cycle. We didn't really actually notice that we missed this particular section, and it is showing within here that no, maybe there may be a few errors. I know this will be in the next video, but if you can see, eventually after doing this, they bring in the aspect of the general expenses. They realize that general expenses has been undercost by 200. So when you're making this trial balance and you notice there's a difference, a suspense account is opened for that difference. That suspense account is open so that you can deal with the amounts missing. It might not be from one expense alone, it may be from two, from three, or just one that is causing the trial balance not to balance, because the trial balance always balances, it always should balance. So if there's an issue, you create a suspense account, and I feel like we could call that our little we're trying to figure you out account. It's a trying to figure out what's going on account. And then when we figure out what we did wrong, we start to take the amounts out of the account so that we put it back where we need to put it. So in this case, as you can see, they tell us that maybe we forgot to put enough money for general expenses, and so it's important for us to put it in. So that is. So as you can see, if we look at the difference, on the debit side, we have 109560, and on the credit side, we have 109331. Then that means this also is a clue to where you put your suspense account. Should it be on the debit? Should it be on the credit? With the suspense accounts, it can be on either or side, depending on which side is less. In this case, the less side is the credit side. So I've already gone ahead and subtracted, and we've realized we have the 229, and we can then put in our 229 in there, and there we go. We have a 0. Ooh. Our trial balance has actually in fact balanced. This is the first part. As you can see, I just had these were the important parts that they marked within the exam that you needed to know, as much as a few more things had to move in this area, but this is where there were most points for this question. But it's important to remember the PEARL is. It will help even as we continue within the financial statements. It's a good way for you to remember certain things, for you to, throughout the jitters, to just know that, okay, we have PEARLS, we have pearls. Whatever we have, we need to make sure it's according to that. Even you have to create accounts, T accounts, PEARLS, pearls always helps. So in this case, this is the first part of the question. We'll go into the second part of the question. We'll deal with the errors, and we will see another way of how you can remember PE and have T accounts that remind you that, okay, this increases, this decreases. But for today, thank you so much for watching. Please do comment if there anything that are pressing, any issues pressing, or question you want us to deal with. Please send it through and we'll definitely work on it. Don't forget to subscribe. Thank you again.